Your view more broadly than just one single stock, but the AI play that is so key to Tesla is so key to the market, and we still question it.
Well, I think there's a couple of things to think about. We are strong believers that this is early innings and it's long-term, medium-term, hugely disinflationary, will bring great efficiency and productivity benefits. But near-term, let's just look at some of the facts here. The hyperscalers are having to spend billions of dollars, probably will go into the trillions. We're doing, a one-time shift from CPUs to GPUs. We're extending data center capacity, but we also have to build power. Power not just for Gen AI, but we just touched on autonomous vehicles, and power demand looks like it's going to double over the next 3 to 5 years. These are huge, huge numbers. Huge capex investment. So it may be near term that actually this investment in capex, which by the way, we think is an interesting investment opportunity in infrastructure, but this investment in capex and maybe shortages that it can bring near term, the monetization doesn't come as quickly and could bring some inflation as well.
So where in the stack does one invest? Do you go still picks and shovels, chips? Do you go infrastructure when it comes to energy? Do you go to applications of AI?
We think you go a little bit to all of them. So first of all, we are invested in infrastructure. We think it's super interesting, digital infrastructure and power, and the combination. We think we can earn equity-like returns, essential services, less correlation to the market, with some great counterparties here, and with revenue escalation and inflation protection over time. That's a pretty powerful story. But we also have investments at the other end of the spectrum with venture companies that are doing some things that are incredibly disruptive. We think there'll be winners and losers from Gen AI, and we want to make sure we have exposure to that as well. And then finally, we have a specialist technology manager, because that allows us in the public markets to look where Gen AI is not yet priced in. And I would say all valuations, particularly in data-heavy industries, Gen AI is not priced in today. And there's some really interesting opportunities there.
Nancy, the problem for our Bloomberg Technology audience, if they're just tuning in, is that Tesla's down 5% on a data set that comes out once a quarter, even though if there's like this big body of people that believe in this long-term story that's very analogous with what you've just outlined. I think I'm right in saying that AlTi has some small exposure to Tesla, but use that as a case study. What wins out here? This multi-year horizon belief in AI, or the short-term pain of having to get there?
Well, we have a strong view that technology may underperform a little bit here. There are very high expectations. These stocks are trading at pretty high multiples, 32 times on average, for the Magnificent Seven. And meanwhile, the Fed and other central banks in the world are easing interest rates, which we think will help the other 493 shares, which trade at more attractive valuations, and with the easing should support earnings growth going forward. So there are things to do in the market. You don't just have to play technology at the moment to benefit from what's happening with the soft landing and the Fed easing. And as I said, we think it's going to be a little time here for monetization to take hold. Maybe it's 26, maybe it's 27. Bain believes, by 27, we'll see $1 trillion in revenue. Let's see. But it's going to take more time. And remember, in the enterprise, when you use Gen AI, it's not like the consumer. You have to embed it in business processes. You have to industrialize it. You've got to make sure that it doesn't have cyber threats and so on and so forth. So this all takes time. So, a note of caution here near term on Gen AI. We can do other things in the marketplace and benefit from the digital picks and shovel build while we're waiting. But we do ultimately think it will be transformational.
Nancy, is there a corner of the technology sector that's underappreciated by investors?
I think beyond the Magnificent Seven, as you look more broadly, to other companies that will participate, NVIDIA is not going to be alone here. Maybe it's a winner take most as opposed to a winner take all. So there will be competition. There are other companies that also benefit. Think about data centers. They need cooling. So there are industrial companies that are providing cooling services to data centers that trade at really attractive valuations. So there are other ways of playing Gen AI in this infrastructure boom. Take a look at utilities, probably one of the best performing sectors year to date. Who would have thunk it, right? So there are other ways to think about this. You just have to think more broadly. Where is Gen AI not priced in, particularly in this period where we're in the CapEx build? The monetization will take some time. And at the moment, I think investors may be getting ahead of what may be delivered next quarter.
What about where it's underpriced globally, Nancy? I think of the latest news that we'll go into a little bit later about KKR looking to take private a Hong Kong-based or traded chip company. What about global exposure?
Well, I think there's some really interesting things happening globally. You might have seen as well, something like Blackstone just did a $16 billion deal in Australia called AirTrunk, which is the largest Asia Pacific data center. Europe is further behind the U.S. build. Asia Pacific is further behind the U.S. build. So we think international exposure to data center infrastructure, power, and build out is a hugely interesting opportunity. They are much further behind the United States, and prices are more reasonable on a relative basis. So, yeah, there are opportunities here beyond the United States, and they are internationally.